Welcome back. This is me, Ibrahim Sani, on the week ahead. We're doing a few interviews and a few conversations while I am in Singapore. One of the people that I'm speaking to is Quest Ventures. Quest Ventures, of course, is a venture capital company that is looking at some of the developments that is currently happening in Southeast Asia. I speak with Jeffrey Sia, the partner of Asia Fund Quest Ventures. He will discuss with me at length some of the key events that is currently happening, particularly when it involves the Quest Venture Day that's taking place on July 13th in Kuala Lumpur. Take a look at our conversation with him.
I'm Singaporean. My mom is Malaysian. My father is from China. So I'm a first generation Singaporean, a very young one. Usually, most Singaporeans are 3-4 generations.
Yeah.
I grew up in Malacca and Johor Bahru, and so I studied triple science, like law, then decided that after serving my national service, I decided that, okay, I'm going to fight out with the best in the world.
Yeah.
So I finished my university degree in business and went to the multinational world. So I joined advertising.
Yeah.
I thought a world where you balance left and right brain, the left and the right brain a lot. I worked at Ogilvy & Mather, met a lot of smart mentors, people who taught me how to see things from the left and the right. Mm-hmm. And then I understood that not everything is the same. You can agree to disagree. Sometimes, when you look at a question, the answer might not be there. There can be more than one answer. And that was creativity, that was also data analytics, that was also strategy.
The question I want to ask you is very simple. Ogilvy & Mather, WPP Group, fantastic, safe, you can probably retire there. Why jump into this whole strange world of VC?
Well, I think I have to reverse that bit. I think because of the always looking for new things, you start to look at when you're in an advertising world, you are doing well, you really want to do well, it's very easy to get a C, you just service what the clients needs. Yeah. But you want to do well, you really must introduce clients new things. Yeah. So in introducing clients new things, I met a lot of new startups, and those days you don't call startups, they were called gig teams, right?
So this is what,
This is 2000s.
2000s. Wow, okay.
So
I remember, in school, by the way.
Yeah, you were in school. You know, 2003 or 2004, I gave a gentleman, you might know him, I gave him a PO to run a set of banner advertising on his website. And the gentleman's name was called Patrick Grove. It was called Catcher.
Okay.
Yeah, that was 2003 or 2004.
Oh my God.
That was how long ago it was.
Yeah.
And then I knew him from there. Okay. And during those years, I gave many of the startups their whole, I call it the first project. Okay. But now I learned the term is called POC, proof of concept.
Today,
proof of concept. But in the old days, it was called project. Yeah. So I gave a lot of startups their projects. I always partner with new companies so that my traditional clients can appreciate new ways of looking at things. Okay. So in the spirit of that, I did a lot of angel investments in a tech world. And I also helped my company look at new partners, whether they can purchase them, whether they can M&A them. This was both at WPP when I was at MyCC, and also when at Publicis at Starcom Midivest Group and Vivaki. Yeah. So later, as I was in the industry, I was known as being a digital data tech guy. Yeah. Even though I came from the traditional world. Yeah. I was very embracing.
Still, yeah, because of your familiarity with the situation, actually, you're not really a newbie in that zone.
Yeah, and I was Google, Facebook's probably the biggest partner in Southeast Asia. So the time came when there was an opportunity to take stock of my career. I decided, like a football player, I took half-time break. First half of my life, work for someone. The second half of my life, I want to do for myself. Yeah, I left the corporate world. I didn't want to do anything. I didn't do any corporate work. I did my digital transformation business. Did a lot of my special purpose vehicles for investments.
So this is what already, like 2010?
This is 2016.
2016, not that far.
Not that far. Then a lot of the VCs that I knew from the past asked me to be their venture partner. So I was a venture partner at IncuVest, and then later on at Quest Ventures. And also I had a lot of friends in the different PE firms and also Temasek as well. So most folks asked me to say, hey Jeff, I think they wanted me to be part of it because they wanted to bring my big business connections to give to their startups or try out projects. Okay. So that was important because you can have all the theory of startup you want, but when the big businesses are not using you and paying you a fee,
there's no point. It's a sleep service.
Yeah, it's just that. So that was the space, and then one fine day, one of the startups called me up and said, hey,
which one is this?
This was a company called SGAG, right? In Malaysia, it's called MGAG.
Oh,
so, yeah, famous called Hatmail, right? Yeah. Millennial marketing company, most recently invested by Temasek. and they also have a license. They also have a global license from Google and TikTok. So the founder said, "Hey Jeff, can I introduce you to James Tan of Quest, because James wants to meet you."
Okay.
So I introduced, and then James asked me to be a venture partner.
Okay.
So I came to Quest, be a venture partner, but it was an ecosystem player, taking a lot of Singapore government grants, doing a lot of grants, and working with different people and some angel investment.
So you can watch the full interview with me, with Jeffrey Seah, with Quest Ventures midweek on my show Notepad. Also here, I've been speaking to the president and CEO of INSEAF University, my old lecturer back when I was a student, when I was an undergrad back in UIA. Professor Datuk Dr. Azmi Omar is now the president and CEO of INSEAF University. I speak at length with him regarding the Sharia investments, how this is going to impact the global community, and most importantly, how can this raise some of the capital market developments in Sharia finance or Islamic finance, or in this case, ESG. Seems to be a harmony between the two. Take a look into my conversation with Professor Datuk Dr. Azmi Omar.
So you see, I mean, if we look at sustainability, I mean, earlier it came as part of the SDGs, Sustainable Development Goals, the 17 Sustainable Development Goals. And prior to that, there was already the movement by the investment sector, the banking sector, the insurance sector, on having what we call sustainable banking, sustainable insurance, sustainable investment. So this is part and parcel of, investors, regulators who are concerned about the environment, the social and the governance. So this symposium is also related to that. Although we talk about the context of investment, but we are also talking about the context of sustainability in banking, in insurance or takaful. So I'll give an example. In Malaysia, we have the value-based intermediation that is being implemented in the banking sector. And last year, we have the value-based takaful for the insurance or for the takaful sector. So what is it all about? So if we look at the value-based intermediation, which is part of the sustainability, is the concern about implementing the objectives of Sharia, the maqasid of Sharia. We see Islamic banks, if we take as an example, Islamic banks previously has been doing the business of trying to provide alternative to Muslims. But then regulators, public are questioning whether is it enough just to provide alternative. What is the role of a financial institution? I think the role of financial institution is not just to provide financing, but again to bring about the greater economic development to the country, to the community. So that is where the role of value-based intermediation comes in. Banks should fulfill that role. Of course, they provide financing, but they must also incorporate the impact towards community. Suppose a bank gives 100 million financing, but what is the impact towards that particular community or state or sector? So you have to look at that.
But banks focus on ROE as well, on ROI, and of course, if they give a financing of 100 million and there's a positive return on that financing, they don't necessarily have to do much more than that. Do you agree with this?
No, I disagree totally, because today we have to look beyond profit. How do you measure the success of a bank? Of course, from a shareholder's perspective, ROI, ROE. But again, does it destroy the environment? Does it create problems to the labor, to the employees in that particular sector, in that particular company? So does it destroy environment? So those are the questions that board has to address, looking at the medium and the long-term impact towards their financing and investment decision. We can no longer be looking at from a short-term perspective. Yes, this financing gives us great 12% return. But the question is, so what? Did you bring impact towards the environment? Because you see, environment today has changed. We know there's a lot of flooding, even in KL there's a lot of flooding, changes to the environment. So banks would have to look long-term. If you're looking short-term, you may be happy today, but banks may not survive, let's say, for example, 30 or 40 years down the road. Why? Because even the employees of the bank, the children, the families of the board members, for example, will suffer. So this is the point. So we have to look beyond profit.
Let's talk about regulation and regulatory requirements on this one. much of entities, not just banks, or not just financial institutions, have to self-regulate when it comes to ESG. Do you feel that there comes a time and place where we need to have a centralized body to actually regulate ESG, and perhaps even, not just setting standards, but implementing them and even taking punitive measures against those that do not comply to these standards? Where do you stand on this?
To me, it should be a combination. It cannot be just punitive. Everything must be regulated. But what you want is also, you want to have what we call principles-based regulation with positive encouragement to institutions. For example, we see in the financial...
Sorry, positive encouragements mean
to do
incentives.
Incentives. I mean, for example, if you take the case of Malaysia, when the government, when, for example, central bank wants to promote or Bank Negara wants to promote certain structures of sukuk, there are certain incentives being issued out, tax incentive, for example. Therefore, it encourages investors or issuers to issue those kind of sukuk. So similarly, we must have certain regulations, but at the same time, certain incentives to encourage not only financial institutions, but also corporate institutions to implement such measures. So in that way, we are looking not only short-term interest, but also we are looking the medium to the long-term interest of the society.
You can also watch the full interview of my interview with Dr. Azmi Omar on Notepad. It's going to air sometime this week. We'll go for one more short break. When we come back, we'll discuss a little bit more on the developments on the week ahead. Welcome back. This is me, week ahead, Ibrahim Sani, in Singapore on location, attending a few meetings, doing a few shots and interviews. Okay, one key item that I want to explore would be the local bourse. Remember earlier in the show we talked about CC International Berhad listing on Bursa Malaysia? Well, now I'm speaking with two individuals from the Indonesia Stock Exchange, IDX. In it is the conversation where we explore some of the key developments that is currently happening, not just on IDX, but perhaps in Sharia finance as well as on ESG financing. Take a look into my conversations with the both of them. We'll be discussing at length on the issues of capital markets, bourse listing, and regional development in terms of finance. Take a look.
The system, we call it the Sharia online trading system, is developed by the securities company. In this point is the CGS-CIMB, one of the securities companies in Indonesia. But the system, the model business is created by the IDX. We create this model business for the market, and because it's about the Islamic capital market, so we should certify this system by the Sharia board. So the system is very unique. Developed by the securities company, the model business created by the IDX, the Sharia compliant certified by the Sharia board. This is the unique. And how it's going on? The system is only a tools for the investor to trade, to sell, to buy, to order the stocks, especially Islamic stock, that comply. All the systems comply to the fatwa. So the system is fully derived from the fatwa. I think this is the only one in the world.
What went through the idea of doing this? I mean, not many, as you mentioned, this is the only, the exchange is doing this. But what went through the process of IDX trying to do this or launch this?
Yeah, we set back to the last 10 years, before 2011. We found out that the market is, the Islamic capital market in Indonesia is very slow. We call it the sleeping beauty market.
Sleeping giant, maybe?
Yes, sleeping giant, because the first product is launched in 1997, but after that, nobody knows about the Islamic capital market in Indonesia. Sleeping. Market is only sleeping. Then we found out, we done some research, and we found out that the problem is the awareness, the market awareness, the public awareness, and second, tools. A market needs tools to simplify when they trade the stock, especially the Islamic stock. So after that, we found out, we talked to the Sharia board about this problem, and we talked to them that we want to what we call it raise up the market, and we need the background. So we need this FICI compliance, and they issued the fatwa.
Okay.
Fatwa number 80, and this is a fatwa only for the trading system in IDX. So after that, when we talk to the market, hey, we have the fatwa, we have the index, but the market needs tools to simplify that. Because in Indonesia, the biggest market is young people.
Okay.
It means everybody wants to do simple.
So something like 30
Yes.
and below or something like that.
Yes.
Yeah.
So we try to find out how. So we convert the first digitalization system in Indonesia is DSRTS in 2011.
Yeah, Indonesia is very advanced towards complying to the ESG update because the ESG has been a very global megatrend around the world, and it has been pushed from our government. It is in our government agenda to push sustainable development in Indonesia. But it is more approach is into the financial market. Yeah, it is start from our FSA, our OJK has been pushed a lot of sustainability regulation towards our listed companies and all of financial institutions. There are numbers of regulation, and the most current regulation is implying the obligation to report the sustainability in their company. So it has been developed a lot in our country.
So because of this new launch on the trading account and the awareness for Sharia investing amongst investors, both retail and institutional, do you feel that the trend is very strong right now for people to take up Sharia products?
Yeah. Because Sharia is basically is an ESG investing approach. That has been currently been a trend in the country. But Sharia is mostly touch the social and governance aspects. But ESG is more complete because they are looking for the environment impact and climate impact or something. And we believe that when there's a new system launched by the CGS, it will push more awareness to the investor to invest in ESG theme and Sharia theme.
So right now, how do you integrate the ESG, I guess, compliance with Sharia compliance? Where does the fit happen, and where is the risk in terms of the two items not fitting?
Currently, it's very difficult. Currently, it's very difficult to combine them because it has a different regulatory system. One is only for the Sharia, and ESG is another. And the other hurdle is because the ESG regulation is only push the listed companies to disclose their sustainability activity, not to comply to some kind of business like Sharia. Of course, as you know, that Sharia should comply, not prohibited in several industry, and then they also prohibited to have a very large leverage. So it's very different regulation. But in IDX, we have a different approach that to create an index. We are going to launch a ESG and Sharia index to combine.
Two separate index?
No, one index that combine the ESG and Sharia. So there will be a Sharia company. The company in the index will be a Sharia company that have a very good implementation and ESG aspect.
Okay, if you want to watch the full interview on the IDX folks with me, just stay tuned to Notepad. There's going to be a bunch of interviews like this that can be found there throughout the week. That's it from me for this week. I wish I can speak with you in the studio, but at the same time, it's kind of fun, doing shows on the road. So for now, that's it for me. Ibrahim Sani. Have a great week ahead.